guys. Well, there is a relentless run up that we have seen in the natural gas prices. It's trading at a 7-year highs, and the latest high that we have seen is $5.50 per MMBTU. It has been a strong run up, not just in the US or the global prices, but when you look at the European markets, we are looking at natural gas prices trading at a $24 per MMBTU. Asia has now hit a high at $19 per MMBTU. The run up comes in as there is a soaring demand for the US exports. The US air conditioning demand itself has been quite on the stronger side, and nearly 50% of the gas production in US Gulf is still offline after the Hurricane Ida hit. We actually have seen the natural gas prices gain up by 30% since Hurricane Ida, and markets are adding in premium because of the stronger demand coming in as well. The latest trigger for natural gas comes in from UK, where overnight we saw prices gain up by nearly 18%. This is after a fire shut down a major cable that brings power from France, and that put in concerns. Electricity, energy, all of these commodities really have been hiking higher. Not just natural gas, take a look at crude oil prices, 2-month highs. Heating oil is trading at 34-month highs. Coal prices are trading at an all-time highs. So everything that has to do with electricity, power, air conditioning, energy, oil and gas, all of these commodities actually have been running up quite strongly. The latest EIA report also suggests that the inventories for natural gas also have been on the weaker side. When you look at a 5-year average, the inventories right now are 7.5% on the lower side. When you look at an year-on-year basis, it is down by 17%. So the supplies are weak and so are the inventories. There also is strong fund positions being built by the hedge funds and many managers across the world, and that has been adding to prices. So as I was saying, 35% up on a month-on-month basis in case of natural gas, and we have seen the prices gain up by 115% year to date until now. The US consumption numbers have been slightly weaker in this year. When you look at the previous year, the natural gas demand was at 83.24 billion cubic feet per day. This year, we've seen an average of around 82.5. Higher prices also have materialized into lower demand, and that exactly is a concern that the markets are looking at. The prices are expected to continue to run up if the winter demand also is strong, and if the winters are harsher than what the street is expecting, then you could be looking at higher price. Last year, same time, we were looking at natural gas prices at around $2 to $3 in US, in Europe, and in Asia as well. So from there, at 5.5 to in 20s is how the natural gas prices are trading. So it has been quite a strong run up. There also is a report from Goldman Sachs which says that they expect the prices to rise further from here. They also have put out a price estimate of around $10 per MMBTU. The last time we saw those kind of prices was in 2008. The important thing is that natural gas prices are used in various things, not just in electricity or air conditioning, but they also are an important feedstock. They also are used in processing of chemicals, fertilizers, paper and glass, among many other things. So the demand uses of natural gas are quite high. The other thing is then when people started consuming natural gas, as we have seen the energy transition, so natural gas clearly has been a fuel of choice because of cleaner energy transmission. That really seems to have hit the prices on where they are. The expectations going forward is that if the natural gas prices continue to be where they are or rise further from here because of the supply concerns, then the markets perhaps will move to other substitutes, and there could be a demand destruction as well, and that could weigh onto the prices. Until then, 5.5 is what we are doing right now. 5.8 is where most analysts feel that we might be hitting a resistance at this point in time. But and that is going to be for the next couple of months now, because the winter demands would primarily come in only by November end or December. So we are still a couple of months away from that. So the next couple of months, natural gas prices could see a range-bound consolidation or even correction. And much would then depend upon the winters on how we are and what are the inventories at that point in time. If it still continues to be on the stronger side, then you are looking at natural gas prices rising much higher from here. As of now, markets do believe that at these current levels, after the kind of run-up that we've seen, some consolidation could be on chance.